Hello, everybody. I hope you guys are having a great day. In today's video, I want to talk about SoFi. Specifically, I think SoFi is becoming one of the greatest values bang for your buck investments that you can do today, because at $7.50, SoFi is a far better deal today than it was like half a year ago, the last time that it was trading at around these prices, because they had a triple beat, absolutely destroyed earnings on revenue, earnings per share, and forward guidance. More so, I believe that people truly are missing or not understanding or just naive and ignorant to the actual strength of SoFi and the flywheel that we call SoFi. Currently a 90th bank in the United States under the tutelage and under the leadership of Anthony Noto, the CEO. But before I do, I want to do a shameless plug. I'm currently in Yonkers, New York. I'm in the hood. Hello, everybody. I'm about to do a inspection on one of my Section 8 properties. I did a full renovation on it around 2 weeks ago. I did an initial video. This is going to be an after video. If you guys want to learn about Section 8 or real estate or being a landlord, these are all my own properties. Nobody taught me. I am self-taught how to do real estate. I do have a real estate channel down below. Please click on the link. Now let's get back to SoFi. The key to SoFi is the fuel of SoFi. Sounds crazy, right? But what fuels SoFi? SoFi's fuel is the customers, the clients, aka the depositors. SoFi has been adding $2 billion of deposits quarterly, and it's not stopping anytime soon. As per CEO Anthony Noto, he literally went on an interview recently and he says, we're taking shares away from the big banks. Literally, I was just talking to my man Zach earlier today, and he is switching from Citibank to SoFi. Guess what? He was watching one of my videos. He's a subscriber, and he was like, Adam, why am I wasting my time in Citibank? I'm not getting 4.5%. Citibank is giving me literally nothing, not to mention fees, not to mention, how hard it is to use. If you need something, SoFi is easy breezy, beautiful cover girl. And you get a nice sign-on bonus. By the way, if you want to sign into SoFi, I have a link down below. You get something and I get something. But even if you don't want that, you should still look into SoFi, because SoFi has a great amount of perks, giving you, the customer, a lot of benefits that other big banks don't give. Why? They don't give a flying fizzle about you because they're fat and lazy. All they care about is their dividends and giving out dividends to shareholders, while SoFi gives out dividends in the form of APY, annual percentage yield, which is currently 4.5%, which is pretty much the best in the business. By doing this, SoFi relies on customer deposits to fuel their entire business, to fuel their entire flywheel, which essentially fuels their lending. And their lending is responsible for over 60% of the revenue of SoFi. Now, the lending is broken down into three pieces. You have personal loans, you have student loans, and you have home loans. Student loans and home loans have been down. However, personal loans are astronomically going up. If SoFi can continue to increase personal loans, right now student loans are going to come in. So for personal student loans, SoFi is the overwhelming leader with over 60% market share. That's huge. Let me say this again. Personal loans, not federal loans, 60% market share. Now, some critics are saying now that people are going to be doing student loans, they're not going to be doing personal loans. I don't believe this. I believe both are going to go up. Because SoFi is so good for customers, for clients, and customers and clients keep depositing money into SoFi, this allows the SoFi flywheel to keep going. More deposits, more lending, more revenue. The bigger you are, the more you advertise. Who's your advertisers? Well, they give an incentive bonus for you guys to sign in. You have people like myself, like Amit, Future Investing, Tevis, and others that are making videos about SoFi. Free advertising. Now, obviously, we want to grow our brand. We want to actually grow our investments. But this is free advertising for SoFi. Nobody's making videos about JP Morgan or Citibank, so on and so forth. When I make videos about Truist, the 7th largest bank in the country, nobody watches those videos because they're boring. They're old school. They're analog. They're outdated. People care about SoFi. Now, SoFi has 3 segments. The banking segment, which people don't understand. They still think that SoFi is only a lending product. They're an entire nationally chartered bank, currently in the 90th spot going for the top 10 spot as per Anthony Noto. It's not a matter of if, but a matter of when. Then they have a financial platform, financial services, where you trade stocks. People, that's going under the radar. They just brought Instacart to market, collecting a shit ton of fees. Shit ton is debatable, but they're collecting fees. The more IPOs that they could underwrite, the more fees they're going to be collecting. And third, they have not financial services, but financial platforms. For example, Galileo and Tensis. Galileo, I believe, is going to grow in the future. One more thing. Home loans. Home loans, people are sleeping on it, but earlier this year, I believe in April, what was the name of the company they bought? Wyndham Mortgages. I might be pronouncing this wrong. Guys, that's huge. They're going to be able to give more mortgages, more home loans. Later on, they're going to be able to do home equity lines of credit, which they don't offer right now. So there's still ways that SoFi can grow. And most people are not realizing that they're going to be GAAP profitable in Q4. And I believe that they're going to keep doing triple beats: revenue, earnings per share, and forward-moving guidance. Anthony Noto is an absolute beast who actually listens to the community, actually does changes based on Twitter, X, whatever you want to call it, where he's actually listening to people's criticisms and taking people's advice. Guys, as long as they keep offering better services, they're going to keep getting more depositors. As they're going to get more depositors, they can lend out better, and it goes boom, 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 so on and so forth. And they are building a brand, and you want to use this brand for everything in your business, for your personal and for your business, so on and so forth. Guys, this is going to be a 4-minute clip from CNBC. This guy's name is Malcolm Ebridge. I'm probably pronouncing that wrong. I was listening to this interview earlier as I was driving up to Yonkers, and I recorded the video because this is a really, really amazing take about SoFi. It's 4 minutes long. Please enjoy the rest of this video, and thank you very much. Everybody have a great day. I have like a 6-figure position on a cash secured put for SoFi at a $750 strike. Last week I was buying at $850, and I just put in a big order for more SoFi options. Hopefully that gets filled for a $15 strike, 2015 January. Thank you very much. SoFi is a much better business today than the last time it was at $750. And yeah, I think it's one of the best bang for your buck possible buys that you can do today in the stock market. Thank you. Enjoy the rest of this video.
Give us your pick and why.
Yeah, so SoFi is my pick for the last quarter of this year. Heading into what's probably going to be their best quarter ever when it comes to earnings. And I actually expect, coming off the success of the Instacart IPO, which SoFi participated in, for them to raise guidance and have a little bit better story to tell now about what profitability is going to look like heading into the end of the year.
All right, so you mentioned this might be their best quarter ever. A lot of speculation about that, mostly fueled by student loans. But I want to talk to you about this. So according to Bank of America, SoFi holds just about 60% of private student loan refinancing. And a lot of people right now are trying to refinance their deals. This is, possibly a temporary boost. Are you worried that after we see this wave of refinancing, that revenues and in just customer engagement with SoFi might significantly decline after this period of student loans returning?
Well, I hope you won't hold it against me too bad, but I'm actually going to disagree with you a little bit about them just being about student loans, because what we saw from 2020, basically when student loans were paused and their bread and butter basically dried up on them, SoFi pivoted and actually started to become a traditional bank, more in the sense where now they're offering personal loans. They bought a mortgage servicer to be able to offer mortgages to their members. They also started offering traditional banking products. And because they're a digital bank, they're actually able to offer better interest on their savings accounts than most brick and mortar banks that have physical locations do. So aside from the student loans, they actually have done a very good job of beefing up their offering. And now, as I mentioned, we just saw for the first time ever them help take a company public and participate in the fees for investment banking duties, separate and apart from the SPACs that they had participated in before in 2021 and 2022 that weren't necessarily as groundbreaking as this one. So I think their product mix is diversified enough that even after student loan refinancings, whatever pent up demand there is has worked its way through the system, they still have the ability to show positive growth and that they're a legitimate player in the banking industry.
Well, Malcolm, I'm definitely not going to be mad at you. You're supposed to defend your pick. I also want to bounce something off of you that analysts have cited. They say rising yields over the last year could also create an issue of write-offs for SoFi. Of course, we've seen the 10-year rise dramatically over the last year and other even shorter-term bonds rise dramatically that they say actually influence the loans that SoFi has.
I think that's a fair criticism. I think that the high interest rate environment that we're currently in is definitely a headwind for SoFi and any other banking institution, but specifically SoFi, who's not as well capitalized as like a JP Morgan or a Goldman Sachs or whoever. But I also think that because their deposit growth has been growing at the rate that it has, it's been pretty significant the last few quarters they've reported. Because that deposit growth is growing so well, they actually have the ability to back up their own loans and not have to rely so much on selling off those loans to secondary servicers the way they had in the last couple of years. So yes, the higher interest rates mean they have to be more careful, but it doesn't necessarily mean that that headwind is going to stop them from telling a bigger growth story, quarter after quarter going forward.
And you also mentioned they've become a digital bank. We've heard a lot about bank consolidation and people moving their money to the bigger money center banks. In your mind, is there any risk of that, of customers moving away from SoFi as just concerns about the stability of digital banks and regional banks could persist?
Not quite. I think SoFi has a little bit different target customer, right? They're focused on the millennial and the Gen Zer that they earn a little bit of credibility with earlier on in their career before they have really hit their peak earnings potential. And we also saw that again with the IPO, because these are the folks that they're selling shares of Instacart to, who are interested in participating in something like that. And so I think SoFi's target customer, one, has a tremendous amount of loyalty as far as the brand is concerned. We've seen that because almost every member they have has more than one banking product with them. But separately from that, because you're willing to refinance my student loans and relieve the pressure on me on a monthly basis from that higher payment that I once had, I'm willing to turn to you